There's going to be a record number of condo completions in this year, 2023. What's this going to do to the market? What kind of effect is it going to have on the rental, the resale, and the assignment market? I'm going to break that down for you on this week's reaction video. And then some other topics we'll be covering today are from the Toronto Star. Even fast rising mortgage rates couldn't stop the rise of Toronto real estate prices in 2022. What are they talking about? And then another article from them, why there's more trouble ahead for real estate in 2023. And again, I told you, depending on whether you're bullish or bearish, there's a headline for you either way. And then the last article is the world's wealthiest cities by the number of millionaires. And yes, Toronto has made it. Now, if you're looking for some help on how to navigate this real estate market in 2023, whether you're going on the offensive or on the defensive, you can book a call with me using a link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational content just like this. And I just want to make a big shout out to all of you guys who on the side kind of messaged me saying, hey, I missed your videos for the last 2 weeks of the holidays. This was actually the first time I took some time off from creating content just because we had a lot of family coming over. But yeah, I appreciate all the kind words and all the kind of message you guys sent out. It does really kind of make me I don't know how to put it. It's very humbling to know that so many of you guys tune in kind of weekly to watch what I have to say about the real estate market. So I do hope some of the stuff I'm providing is of some help to you. And again, like I said, if you want to work with us and our team, you can always book a call with me. Now, the first article that we are going to be talking about is record number of condos to flood Toronto market in 2023. So what's happening is right now is the massive bull run we had in 2017 and 2016 of the pre-construction that was being sold. It's coming to completion now. Now, one of the things you have to keep in mind is there's always like a set amount of like scheduled completions, but as you know, the pandemic and then delays, like a chunk of them actually don't come to market. If I looked at the numbers last year, I remember kind of from Urban Nation saying that there was like 25,000 units completed, but like 9,000 of them actually got delayed. So again, this is just the expected kind of completions. It doesn't mean it's necessarily gonna be that amount, but let's see what the Globe and Mail has to say. So they're saying that there's going to be 32,000 that's going to hit the surrounding area and the suburbs, which surpasses the 22,000 that were completed in 2020. Like I said, there's always a scheduled completion, and then there's always the actual completion that we find out at the end of the year. Now I'm going to classify like where these people who have closings coming up are going to land in the spectrum of the rental, the buy side, or the assignment side, right? So they're saying here now buyers may have problems qualifying for a mortgage, which is correct because now the 5-year rates are 5. If you did buy in 2017, 2018, the rates were at like 2.5% to 3%, depending on where the variable or fixed. And then the lenders may be coming in the lower prices, and you have to come up with the funds to go for it. So what I will say is we do have a lot of completions on our side, on our team, that we sold in 2017 and 2016 that are finishing this year. We haven't heard from anyone who, on our side anyways, has had issues in regards to needing to sell the property. So we've had 2 people reach out to us that bought with us that wanted to sign it, but not because they couldn't close it, just because of family reasons and they didn't need the asset anymore, right? So I wouldn't say that people who bought in 2016, 2017 have a need to sell it, because you have to remember, let's just use like downtown Toronto as an example, because we did a lot of stuff there. So you bought at like $950 to like $1,000 or maybe $1,050 a foot if you bought in that kind of era. So if you were to close on it right now, you're still in what we call an equity positive position, because like downtown new stuff is about like $1,100 to $1,200 a foot right now in a good building. So that means that you've made money and you're going to want to close regardless of the situation, so that you're not going to be under appraisal. So that's problem number 1 result in that segment of the market. Now, problem number 2, depending on if they bought other stuff, if they've closed other stuff, if they refinance, can they actually qualify for the mortgage? Because if you get a rental right now at the higher rates, they may just break even from the math that I could look at, even at the purchase prices in 2016, 2017, but you still have to qualify for it. Now, most of the people that I have heard from for some of the closings we've had in February and March, they are having no problems getting it. We had some clients even get a 3-year fixed at 5% from HSBC. So that's kind of what we're seeing right now from that side. Now, what this demand is going to do is, if, say, most people are kind of similar to our clients in that segment, there is going to be a lot of rentals coming to the market. Now, I have been saying this for a while. I saw the rental market slow down in November, and I just think that the rental kind of like prices have kind of peaked already. So I do think maybe we're going to look at pressure of the rental prices coming down. Now, am I concerned? Well, I mean, it's probably good that rental rates are coming down. Is it bad for a lot of these investors? Potentially, right? Like bad, not in a sense like they're screwed, but it's just in a sense that, maybe they lose $100 off their rent. Because you have to remember, when pre-construction closes, it's like, say, 200 to 400 units coming down. So it's always very competitive to kind of get to the market, right? So we had a lot of clients closing on E2 and they kind of staggered out the closing, and the rental rates were lower than even in in E1, which was at Yonge and Eglinton, because there was so much supply. So when you mix that in the building and the way you have pre-construction kind of closes and occupies, and you marry the fact that like the rental market is slow right now and probably won't pick up until the spring, summertime, I can see that the rental rates may come down a little bit from where they were at the peak of 2022. So it's not detrimental. Now let's look at the other component of it, which is if you have closings and see maybe it's in a mid-rise or kind of even like potentially a low-rise, right? Call it like sub 5 stories. And that stuff is kind of rare. You could have bought, because it takes shorter durations to build this thing, at above market value. So what that means is, let's say, again, resales 11 to 1200 in downtown. Say you bought it for 1300. I know 2 buildings that are coming for closing that were in that situation. And now you're like $100 or $200 per square foot under market. So those people may need to sell, right, on assignment. And I've seen a lot of those buildings with people trying to sell right now. And if they do close, what's going to happen is they may be under appraised. So this is one of the situations where it could be a little bit tricky. There was a building that registered and like the amount of people who didn't close has increased, but it's hard to say that is it going to make a large enough effect on the condo market that you're going to see it. I personally don't think so. We'll probably see it in the rental side first, because I think most people who are closing this year are probably in an equity positive position. The people who are in an equity negative position probably are very, very small. Now, if prices don't move up, and they stay the way they do for, call it 2-3 years, the people who close in 2024, 2025, and 2026, meaning a chunk of those people would have bought during the pandemic in 2020 and 2021 at elevated pre-con prices, then we're going to start seeing more problems. But at the moment right now, despite everyone wanting to hear doom and gloom, I don't think there's going to be that much doom and gloom in the market right now, just because people are still in the equity positive position right now. And I know this for a fact because we have some stuff that's closing this year as well, right? Now, the other thing that I do want to point out to you, which is an interesting stat, is saying that the average rate of a pre-construction condo was about $1,427 a square foot of the third quarter of 2022, which is basically called it 3-4 months ago. And it comprises of an average price on the resale right now at $891 a foot. So your spread right now is close to $500 a foot, call it $450 or so, $460, okay? So that spread is like 30% above what it is. So if people who bought pre-construction in 2022 don't see a 30% price appreciation, like I was saying earlier, then they're going to underappraise. And the banks are very conservative on the appraisals right now. So that stuff, I wouldn't be too worried right now, because the stuff that is closing was bought in 2016, 2017. Like I said, if we're using downtown at $950 to $1,050 a foot. So they're in equity positive position. But the further along we go and the more stagnant the prices are for the condos resale right now, then the bigger the problem we'll have in the future. And it will kind of have a trickle down effect on the entire market, especially the resale market. Now, if you guys enjoy this type of content, make sure you help me smash a like button and share this to your family and friends, because every single week we put this stuff out there so to give you an idea of what's happening in the market, boots on the ground, plus kind of macro top view looking down. And while you're at it, just make sure you subscribe to the channel. And if you're looking for some help on how to navigate this market, you can book a call with me and work with our team using the link that's right here, www.chatwithzen.com. So the next article I got here is, and before I go through this, because I don't want to sound like I'm preaching to the choir or anything, but essentially, if you're a bull, like I said, you can have an article that reads like this or a headline that reads like this. And if you're a bear, you can also have a headline that reads like this. It's totally just catered to you. But remember, at the end of the day, the newspaper's job is to sell headlines for you to read it and sell you subscriptions and get eyeballs so that they can get advertising revenue. But regardless of that, what I'm going to say is this article here, totally bogus. I don't blame the person who wrote this, because the editor puts the headlines, but it reads, even fast rising mortgage rates couldn't stop the rise of Toronto real estate prices in 2022. Who is this person talking about, and what market in Toronto are they talking about? So they're saying here, prices are up 8.6% year over year from 1.19 million, thanks to very strong February and January. Look, this is true, and my market watch will come on Thursday, and I've already kind of wrapped up some of the data for that. And I kind of even said in the newsletter that I have, basically what happened is a bulk of the sales, meaning I think like 50 or 60% of the sales happened in the first quarter of 2022. which meant that if you take the average of the entire year, more than half of those properties that sold were at the peak prices, meaning that even if prices are now down to say like $1,050,000 or so, instead of this $1,200,000 that they're talking about, that number is actually correct. But if you look at the December number, which the average price is $1,050,000, so 1050, it is not what this actually says. So you have to understand how the data is looked at. And like I've been saying before, the data is going to look even worse in February and March. We may see prices down 20, 30%. So again, understand the data and how it's actually being shown to you so that you don't just fall for the headlines, because let's be real, everybody is guilty of that regardless of who it is. Then the next article we have here is why there's more trouble ahead for real estate in 2023. Again, this is for your bears here. The thing that I do want to draw your attention to right here is like, a lot of these brokerages come out with expectations of what prices are. So Royal LePage is saying that, prices are going to drop about 1%. I think that's probably on the more like bullish side. I think in my prediction, I was saying like probably the worst case we could maybe down 3 to 5%, at the best case up 3%, right? So I think I'm a little bit more bearish than that. And it's not to say that I'm not bullish on real estate long term, because I definitely am. It's just in the short term, like I've been saying, it's the inventory that's keeping the prices where they are right now. In the midterm, it's going to be the rates, and no one has any idea what that's going to happen. And in the long term, it's going to be kind of the demographics and the immigration and the jobs and kind of where they're coming in to dictate where prices are. So that's kind of, again, my perspective I've been saying for the last 6 months. So depending on who you subscribe to and what you plan to do, again, like you can never time the bottom. You just have to do what's right for you. So in real estate, there's always death, divorce, and debt. If you hit one of those things, you may be forced to sell and things have to still move along. It doesn't freeze. Like I do say that I think 2022 was probably the low in terms of number of transactions, because it was basically a lot of months of 20-year low. I think 2023 will be a little bit better than last year, but prices may still be lower than last year. That's kind of what I've been saying in the prediction video. Now, the last article here, I just want to throw it in for fun. Someone sent it to me saying that the world's wealthiest cities by number of millionaires is the top 20. And look, number 1 is New York. And then where are we? Toronto is 15 out of 20, which is pretty good. So it's not to say like, people can afford housing, because when you look at the average price to average income, again, I've talked about it, I don't like that metric, but a lot of people use it. Toronto's really, really okay relative to some of these other cities, right? So I've looked at data from other people before. Toronto's definitely better in New York in terms of like the multiplier, because Toronto's like 22.5 right now. Data for Thursday, you can check, wait for that and make sure you subscribe. New York is like 33, 34. Tokyo, San Fran, London, all higher than us. Singapore, Los Angeles are higher than us. Chicago and Houston are much, much lower us. So if you want to call it a good quality of life where your income is much lower than what the prices are, you may want to consider Chicago and Houston. But again, these are millionaires, right? Of course. And then when you look at the next few, you got Beijing, Shanghai, Sydney, Hong Kong, all way, way, way higher than us. Hong Kong is at like 50 times right now, which is absolutely ridiculous. Frankfurt is higher than us. And then we got Toronto. So that's what I'm saying. Like Toronto's okay per se in terms of like affordability. But I'm actually very like curious to see how they count these millionaires. Like, do they have to have cash and it's kind of like equity, stock, bonds, all that stuff? Or are we talking about like real estate millionaires who people have $1 million of equity, but then you have to sell it to actually get it? I don't know how they account these numbers. It'd be kind of interesting, but it's just to kind of like put out there, like Toronto is a great city. It's world-class in certain ways. It's not world-class in certain ways, but we're getting up there. And I don't think anything's perfect, but relative to kind of, I think all the other places in the world, I personally think that we're very blessed to be in Toronto. Anyways, that's my take. Anyways, I'm going to wrap this up for this week's reaction video. It's actually really good, and it's great to be back to start making this content. Something was kind of weird and missing when I wasn't making these videos, because I've been doing it for like 5 years straight. But yeah, glad to be back. And if you guys are looking for help to kind of navigate this real estate market, again, just book a call with me right here, www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.